Greetings, crypto enthusiasts. Welcome back to Digital Assets Unfiltered, your go-to source for all things crypto. Today, we're diving into a thought-provoking scenario. What if Michael Saylor, the CEO of MicroStrategy and a staunch Bitcoin advocate, is wrong about the future of Bitcoin?
But the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and the strategy built around Bitcoin is generally a pretty safe one for institutions.
Let's explore the possibilities and implications if Saylor's bullish predictions don't pan out. Michael Saylor has become a prominent figure in the crypto space, famously leading MicroStrategy to invest billions in Bitcoin. Saylor has famously referred to Bitcoin as digital gold and has positioned it as a hedge against inflation. His company, MicroStrategy, has invested heavily in Bitcoin, considering it a long-term store of value. His company's immense Bitcoin holdings and his unwavering belief in the digital asset have drawn both admiration and skepticism. MicroStrategy's Bitcoin holdings topped $8 billion with his latest purchase. But what if this vision doesn't align with the future reality of Bitcoin? With the Bitcoin halving approaching and the bull run on the rise, we feel that Michael Saylor's bet on Bitcoin will be a successful one in the short term. Being in this crypto space, you have to be all in on the future outlook of innovation and tech. Some are in it for the short term and some for the long term. But we all have a little voice in the back of our head saying nothing is a sure thing. If Saylor is wrong, MicroStrategy's fate would be expected to take a nosedive. The company's heavy reliance on Bitcoin investments exposes them to a lack of diversification, which could have a negative impact on their financial well-being and investor trust if the value of Bitcoin drops. This could lead stakeholders to question Saylor's leadership abilities, and the company's reputation would potentially suffer as a result. Saylor's unwavering support for Bitcoin has had a profound impact on numerous investors. However, any setback in the digital asset could potentially shake their confidence. Saylor's gone beyond the safe zone? Michael Saylor finds himself in a position where reversing his stance on Bitcoin may seem unlikely. With a substantial investment from his company's funds and his own personal wealth, he is heavily committed to the digital asset. Consequently, he is compelled to continue advocating for Bitcoin in the hopes of attracting more buyers and driving up its price. Saylor's unwavering optimism has undeniably contributed to the growth of this digital asset. However, his significant investment in BTC also raises valid concerns about his objectivity and potential conflicts of interest. Given that both his personal and company's fortunes are intertwined with the success of Bitcoin, it is worth pondering whether his relentless promotion of the cryptocurrency stems from genuine belief, self-interest, or a combination of both. If Saylor's forecasts regarding the future of Bitcoin do not come true, it could jeopardize not only his personal reputation, but also the financial stability of MicroStrategy. This predicament might present a challenging situation for Saylor, as admitting any uncertainties or worries about Bitcoin could potentially harm the value of the asset and his own investments. A hedge against inflation? The debate surrounding Bitcoin's supposed role as a hedge against inflation has been ongoing. Supporters claim that its limited supply safeguards against the erosion of purchasing power, but skeptics highlight instances where Bitcoin's price failed to show a consistent inverse correlation with inflation rates. With central banks globally adopting expansive monetary policies, the true effectiveness of Bitcoin as an inflation hedge will soon be put to the test. Given these concerns, there is a possibility that traditional assets like gold could regain popularity. Additionally, altcoins that exhibit more stable price dynamics, such as stablecoins or even assets like Ethereum, which have proven utility in the digital realm, might compete for the coveted position of being a reliable store of value. Retail investors, who have become aware of Bitcoin's limitations as a store of value or hedge against inflation, may start to doubt its potential. This loss of faith could trigger panic selling and further decline in prices. The impact on institutional investment. Institutional investors have been increasingly drawn to Bitcoin, with Saylor's strong support playing a significant role. However, if his optimistic outlook turns out to be misguided, these organizations may choose to pull out of the market. The uncertain regulations surrounding cryptocurrencies worldwide could also impact the value and adoption of Bitcoin, potentially affecting not only MicroStrategy's investment, but also the confidence of other institutional investors. If such a retreat were to happen, it would undoubtedly have a ripple effect, shaking the long-standing belief that institutional investment is crucial for the widespread acceptance of cryptocurrencies. Saylor's unwavering faith in Bitcoin has cemented his position as a maximalist. But if his claims are proven false, the maximalist ideology could lose its strength, prompting the crypto community to reassess the dominance of Bitcoin. Consequently, this could create an opportunity for other cryptocurrencies to step into the spotlight, fostering a more diverse and dynamic market. Implications for blockchain technology. Despite its connection to Bitcoin, blockchain technology has a wide range of uses beyond just cryptocurrency. Even if Saylor's predictions about Bitcoin don't come true, blockchain technology is expected to flourish. Various industries such as supply chain management, healthcare, and finance can reap the rewards of blockchain's decentralized and transparent nature. Take supply chain management, for example. Blockchain has the potential to streamline processes by offering real-time tracking of goods, combating fraud, and promoting collaboration among stakeholders. In the healthcare sector, this technology can ensure the secure and efficient exchange of medical records. Similarly, in finance, blockchain can bring about transparency and reduce transaction costs. Regulatory hurdles around the corner. Governments across the globe are grappling with the complex task of regulating cryptocurrencies. The introduction of new regulations that impose restrictions or even bans on Bitcoin could have a detrimental impact on its widespread adoption and overall value. This, in turn, may cause retail investors to lose confidence, exacerbating the decline in its price. China has already implemented stringent regulations on cryptocurrency trading and mining, which has raised concerns about the future of the industry. However, countries like Switzerland and Malta have taken a more favorable approach by establishing regulatory frameworks that encourage innovation and growth within the crypto space. In a bold move, El Salvador has even embraced Bitcoin as legal tender. Nevertheless, the varying regulatory landscape worldwide creates an atmosphere of uncertainty surrounding Bitcoin's future. It highlights the significance of closely monitoring developments in this ever-evolving field. The future, without Saylor's vision. Should Saylor's predictions fail to come true, it doesn't automatically mean the end for Bitcoin. This digital currency has proven its resilience in the face of challenges and has consistently adapted to change. While Saylor's vision may stumble, Bitcoin still has the potential to succeed in other areas. It could be utilized in various use cases or even become a vital component of a larger digital currency ecosystem. Take, for instance, the Lightning Network, which aims to address scalability concerns and facilitate faster and more affordable transactions for BTC. This demonstrates that Bitcoin can serve not only as a store of value, but also as a medium of exchange. Short term, we believe Michael Saylor's predictions will make him a lot of money. No one has a crystal ball, and governments won't bow down to losing control. In the end, it is going to take a lot of change in the world, and that kind of thing will move at a snail's pace without the right politicians in office. Personally, we know change is not easy, and most people do not like change, especially if it does not favor their bank accounts. We will just have to wait and see. In conclusion, the scenario where Michael Saylor's bullish predictions about Bitcoin prove incorrect raises intriguing questions. It could lead to a reevaluation of Bitcoin's role, impact market dynamics, and influence the trajectory of corporate Bitcoin adoption. If you've enjoyed this exploration, don't forget to hit the like button, share your thoughts in the comments, and subscribe for more insights into the ever-evolving world of cryptocurrencies.